Good evening to everyone. Welcome to our finance collab session. So today I'll be looking at question 4.2. So this is learning unit 4 of your textbook and learning unit 4 of the module as a whole. This is a section called an introduction to managerial accounting. And what we look at in this section is setting up and identifying the different categories of costs that are specific to a company that is producing the goods that they sell themselves. So far, all we've looked at are companies that are purchasing goods that are already completed, that are ready to be sold off to a customer. So it's just purchased, we add on a markup percentage, and then we sell that item at a profit to the final customer. Now, under this section, we look at a company producing the goods that they sell themselves. So, involved in the process is identifying the actual cost incurred in producing specific products. So, this is what Learning Unit 4 is about. It's about identifying for a company that produces the products that they sell themselves, what are the costs involved. So, you will see in your textbook, as well as this example, that your costs fall into two main categories, and you'll see the headings of them on the next page. So I'm just going to skip to that for a second, just to show you what I mean by that. You'll see that your costs fall into two main categories in terms of the production process. So the first category is your product costs, which are primarily known as your manufacturing costs. So I'm going to write that on the side here as well. Sorry, let me just darken this pen so that you can see clearly. So manufacturing costs are also just another word for your product costs. It's known as manufacturing costs or production costs or product costs. And these are the costs that fall into that category. It's your direct material, direct labor, and manufacturing overheads. So I'm just going to write it on this page to make it easier for you to be able to see, because on the next page is just a bit of writing, so it's not going to be very clear for you. So you're going to find that your production or manufacturing costs have three categories. So manufacturing costs, they are also known as production costs, as I said, or product costs itself. It's made up of three categories. That's direct material, direct labor, and manufacturing overheads. Then you have your non-manufacturing costs, which are also known as period costs. And these are your general administrative costs, as well as your marketing, selling, and distribution costs. So marketing, selling, and distribution costs also fall into this category. And here you're going to see that the reason we call manufacturing costs product costs as well is because it's based on the matching principle in accounting, which says to you that, let's suppose you have an item that's produced by the company and it costs 10 Rand to produce. So if it costs 10 Rand to produce and we produce this product, let's just say now in the month of April, the idea behind the matching concept is that this 10 Rand cost associated with producing an item is carried through with the product. Even though the product was produced in April, let's suppose it only sells in July. So it's produced in April, but it's only going to be sold off to a customer in July. The 10 Rand cost, that expense, that cost of production, is going to stick with the product. It's also literally referred to as that sticking cost. So it's going to stick with the product from the time that it's produced up until the point of sale. So that 10 Rand is going to only be recognized as a cost or an expense in the period when the income actually comes in or when the sale actually takes place. So this is the reason we call it a product cost, because it's based on your accounting principle, the matching principle, saying that the cost of an item must only be recognized as an actual expense in the period when the actual sale takes place and that income flows into the business. So this is why it's called a product cost, and the three product or manufacturing costs are the one up here: your direct material, direct labor, and your manufacturing overheads. So what is direct material, direct labor, and manufacturing overheads? Very briefly, your direct material is looking at in the production process when, again, we're looking at a company that is producing the items that they sell themselves. Direct material is looking at the actual core raw material used in the production process. So if you have, for instance, a table that is being produced, the wood that is used to produce a table is the core raw material. Without it, production will come to a standstill. It is the first and most important raw material that is used in the production process, and this is why it's regarded as the direct material. Here, direct material can also be variable, meaning that it will change with your level of production. The more you produce, the more direct material or raw materials you'll need. The less you produce, the less material you will need. So that's your direct material. Now you also have indirect material. So indirect material are all of the smaller items that are used in the production process that can be easily substituted. So it's not direct because it will be such that production can continue without the item because the item can be easily substituted. These are examples such as nuts, nails, bolts, glue, polish that's used in the production process. If, for example, as we said, a table is being produced. So these are items that are smaller in nature where without them, you can find an easy substitute and the production process can continue as normal. So indirect materials falls under the category of your manufacturing overheads. Then you have your direct labor. So again, here the word direct tells us that these are the people that are physically involved in the production process. It's also called touch labor because these are people who are physically touching the items that are being produced. So, for instance, a tailor that sews clothing, he is regarded as direct labor because he's physically touching the item of clothing that's being sewn. And you also get indirect labor, which is, for instance, let's just say in a factory, you have supervisors, you have security staff, you have cleaning staff, you have managers, you have factory foremen. They are all indirect labor because they are not directly producing the items, so they're not directly involved in the production process. So for this reason, they are regarded as indirect labor. Sorry, I mistakenly wrote indirect labor there. It was supposed to be indirect material. So indirect material is the first one we discussed just now, and then indirect labor also falls into the category of your manufacturing overheads. So as you can see so far, your manufacturing overheads is made up of your indirect labor and your indirect materials, but what manufacturing overheads is all of the costs apart from direct labor and direct material, but is involved in the factory, like I mentioned. And here the idea, remember, is that this is a company we're dealing with that produces the goods that it sells itself. So the idea is that there is a factory where the goods are actually produced, and then there is an office space. I'm just going to write that below here, below the non-manufacturing cost. There's an office space where your managers, your different departmental heads, like your HR department, your production department, your marketing department, all of the heads of those departments and the admin staff will be placed or sitting in the office administrative side of the business. Only the production takes place in the factory. So any other cost apart from direct material and direct labor would fall into the category of your manufacturing overheads. So your manufacturing overhead so far, we said, is still incurred within the factory, but it's not direct. So that was your indirect labor, your indirect material. Then you also have items such as rent, but for the factory, you have maybe water and electricity. I'll just label it utilities. So let me just erase that. So you have utilities that will also fall into the factory. Then you have maybe the telephone bill for the factory. You have the depreciation for the factory, and so on. So anything that is related to the factory but is not direct in nature, so it's not direct material or direct labor, this would fall into the category of your manufacturing overheads. So that's your manufacturing costs, which are also your product costs. Then we have your category of period costs. So these are also known as non-manufacturing or non-production costs. And the reason it is labeled period costs is because, as opposed to the product cost, where it's based on the matching principle of record the cost only when the income comes in, here a period cost is where if the cost was incurred in this month, it must be accounted for, or set up in your statement as an expense in this month. So it must be deducted in the month in which it took place. And here there are two categories, which are your admin costs, your general administrative costs, as well as your marketing, selling, and distribution costs. So here your general admin costs are literal to the word the general administrative costs, or the costs incurred in the day-to-day running of the business. So they're the same type of items that would appear under your overheads, but they're for the office instead of for the factory. So it would be rent for the office, telephone bill for the office, water and electricity for the office, the stationery bill for the office, salaries and wages of your office administrative staff, any cost pertaining to the general day-to-day runnings of the business would fall under your admin costs. Then you have your marketing, selling, and distribution costs. So these are literal to the word any costs associated with getting the product to the final customer. It's also called order getting and order filling costs for that reason, because it's concerned with anything that is involving getting the product onto the shelves or to the final customer. And it's anything that's related to marketing, advertising, commission that's paid to sales personnel, traveling expenses for your sales personnel, freight, carriage, railage, anything pertaining to getting the product to the final customer. So that's your general explanation of the headings that you see here as well, so that it makes it easier now when we're working with this example to identify what goes into each respective category. So we know what your product costs are. They are your categories of direct material, direct labor, and manufacturing overheads. And then your period costs, which are non-manufacturing and non-production in nature, are your admin and your marketing, selling, and distribution costs. So let's go ahead and get started with this example. Here we are basically, you will see when we read through the information, in essence, what we're doing is all of the items that are listed out here, we're calculating the respective value and putting it into the respective block to indicate that it's either a marketing, selling, and distribution, or an admin cost, or a direct material, or direct labor, or a manufacturing overhead cost. So let's read the information first, whatever is relevant to the example, and then we'll look at the actual calculations. So it says to you, Renegade Dealers manufactures a standard type of plastic bag used in the packaging of potato chips. They have 4 plastic extruding machines. Please highlight that they have 4 machines that are operating in the factory at 80% capacity. At 100% capacity, such an extruder can produce a total of 400 tons of the finished product per month. So it's basically saying to you that currently the company is only producing or operating at 80% capacity. They said that to you here. So if, and immediately here, you'll need to calculate it. You'll see it in the next sentence as well. If at 100% capacity, they are producing 400 units, they are producing 400 units, then we need to now know how many units they will produce at 80% capacity. So all you're going to do is take the 400 and multiply it by the 80%. So it tells you that therefore on average 320, which is the 400 times 80%. So 320 tons of this specific item are manufactured on a weekly basis. Actually, it should say monthly basis because they did say monthly earlier. Let me just check that. Okay, actually, this was incorrect. So this should have said per week, not per month. So please just correct that there. So per week, it would have been 400 tons, but now at 80% capacity, they're only producing 320 per week. And they said to you, assume that there are 48 operational weeks in a year. All amounts are exclusive of VAT where applicable. Assume that all of the products are sold within the same month during which they are manufactured. So from the information we have now been given, we know that 320 units is produced per week. Okay, so that is your relevant information here. Let's look at on the next slide. Oh, sorry, the next page, what they've given to you at the top. So they did also say to you here in terms of the So they said you complete the following table by using the monthly figures. Monthly costing figures is what we're focusing on here. So you're going to be calculating the total monthly cost. So the figures that we're putting into this table is based on a month. So not a yearly figure, it's just for 1 month or based on a single month at a time. And they said to you to assume 4 weeks for the month. So we know there's 4 weeks in a month. We know that we're drawing this up for 1 month at a time. And they said to you that currently your production is 320 units per week. So let's get started with this information. So they said to you in the first point that polyethylene was purchased per week and it's 25,000 rand. This polyethylene is regarded as your direct material, so please make note of that. It is the material that they use to produce these plastic bags. And this is a cost that was given to you per week. Now, remember, we need the cost to be on a monthly basis because that's what they asked us for. So here you're going to take this cost and you're going to multiply it by 4. So the 25,000 Rand is going to be multiplied by 4 because it's 25,000 a week. And they said to you at the top here that there are 4 weeks in 1 month. So 25,000 times 4 is 100,000. And we said that this is a direct material. So under the heading direct material, you would put in that 100,000 Rand. So generally, if you're asked a question like this, whether it's in your assignment or whether it's in your exam, you will draw up the table exactly as you see it here. You do need to know the format of this table, so please make note of it. Question 4.2 in your textbook, you will need to know the format of this question, of this table. And you're going to see that you need to show all working out. So generally what happens is in a typical exam or assignment question, exactly as you see the information laid out in each of these blocks, so all of this that's written out here, you will have the information given to you, but when you're drawing up your table, you don't have to rewrite all that information. What you're going to do is, and I'm just going to show you an example of it here, you'll have your headings, your respective headings, direct material, direct labor, and so on, manufacturing overhead, and so on. Then you're going to have a block, and the first transaction that they mentioned to you, instead of writing out the words, the same words that you see on this page, like they have given it to you here. So instead of writing that out, you're just going to show the working out. So you would have shown the 25,000 per week times 4 weeks, and then you would have put in the 100,000 under the heading of direct material. So you will use this space in that first block to show your working out because there are marks allocated to your working out, and then you'll do the same for each one of them. So that was your first one, 100,000 Rand was your answer. Sorry, I'm just going to clear that so I have some space. So times 4, and that was 100,000 under your direct material. Then the next one said to you, wages of the machine operators. So immediately the machine operators are the people that are physically producing the goods that are being produced. So this would be direct labor. So wages of the machine operators are 1,200 Rand per operator per week. So here they then said to you that there are 30 machine operators on duty in the factory at any point in time. So all you're going to do here is say that the wage is 1,200 for 1 week, but there are 4 weeks in the month. So this is the salary for the month, but this is per person. And there are 30 workers. So further to this, you will multiply that by 30. And now you have the total direct material, sorry, the direct labor. You have the total salaries that are paid to the factory workers. So 1,200 is the wage per week. There's 4 weeks in a month, so you multiplied it by 4 to give you the monthly figure. And then this was for one worker. So I'm going to write that here. This was for one worker. And then you'll multiply that by 30 to get the total for your 30 workers. And that would give you an answer of 144,000 Rand under your direct labor. Okay, then the next one says to you that you have the monthly salary of the factory supervisor, and it was 13,000 Rand. So this firstly is a monthly figure already. They said it was a monthly salary. So you don't need to do any conversions to the 13,000. And then you need to identify what type of cost it is. So it is a supervisor for the factory. So I said to you earlier that any salaries and wages, any depreciation, anything at all, any cost associated with the factory that's not direct in nature, this will fall into the category of your manufacturing overheads. So here under your manufacturing overheads, immediately the 13,000, it doesn't need to be converted at all. You're simply going to take the 13,000 and put it into that block, your manufacturing overheads. Then you have depreciation. So I just want to erase a bit here. Okay, so depreciation, and this is very important. Depreciation on your plastic extruding machines is 246,900 per machine per annum. Now, the reason I say that this is important is because I asked you in the beginning to make sure that you're paying careful attention to the wording. They said to you here that the company has 4 extruding machines. So basically what you're saying is that it's 246,900 as your depreciation. They said per machine. So basically, you are now looking at if that's the cost of depreciation or that's the depreciation charge for one machine, then if there's 4 machines, charge for one machine, then if there's 4 machines, it's 246,900 times 4. This will tell you the total depreciation, but this is on an annual basis. They said per annum. So you are now, remember, working out these values on a monthly basis. So you are going to have to take that figure and divide it by 12. So this is the 246,900 depreciation for one item or for one specific, yes, so sorry, for one machine, not one item. So you're going to take 246,900 times four machines, because I mentioned to you earlier that there are four machines. That total is on a monthly basis. We now need to bring it to, sorry, that total is on an annual basis. We now need to bring it to a monthly basis. So we will divide that by 12. And your depreciation falls into the category of your manufacturing overheads. So any cost associated with the factory, apart from the direct material and direct labor, would fall into your overheads. So this gives you an answer of 82,300, and that is your direct material. Sorry, that is your depreciation. Sorry, I'm reading the wrong thing from the top. Okay, so the next one, then we're done with your depreciation. The next one is the depreciation on the office equipment. So for the office equipment, you are now looking at it being an administrative cost. The reason for this is because anything that is dealing with the general day-to-day administrative of the business will fall into the category of your administrative costs. So basically the same things that fall under overheads, but now it's for the office instead of the factory, it would fall into this category. So here, depreciation on the office equipment is 48,000 rand again. It's for the year. So you need to now convert that. It's 48,000 per annum. It's for the year. You need to now convert that to a monthly basis. So all you're going to do is say 48,000 divided by 12. So 48,000 divided by 12, and that will give you 4,000 rand, and we said it is an admin cost, so 4,000 rand here. Remember, if it was depreciation for the factory equipment, which we just did just now, it would be recognized as an overhead. If it's depreciation for the office space, it's regarded as administrative. Then you have, again, further to that, depreciation on the delivery vehicle, and it's 15,600 per year. So here, depreciation on the delivery vehicle will just be taking the 15,600 and dividing it by 12. So 15,600 divided by 12 gives you a figure of 1,300, and depreciation on a delivery vehicle is what we're focusing on here. So any cost associated with delivery, getting the product to the final customer, falls into your general admin costs. So that would be the figure of 1,300 here under your marketing, selling, and distribution costs. So as I said, any cost incurred in getting the product to the final customer is going to be regarded as a marketing, selling, or distribution cost. So here again, it was on an annual basis. You needed to bring that to a monthly basis. So we took the full figure and we divided it by 12. Then the next one is the CEO's traveling costs, and this was 5,500 per month. Why is it not highlighting? So CEO's traveling cost, 5,500 per month. So this is now going to be, it's already on a monthly basis, so you don't have to calculate anything. And the CEO's traveling cost is regarded as an administrative cost, so that's 5,500. If they had to specifically say to you that the CEO traveled for this job, it was for the job of producing the packets, then you would recognize it as a marketing, selling, and distribution cost. But in general, here the idea is that you would just simply put it into the column of administrative. So here it was 5,500 under your administrative costs. Then the next one, and I'm just going to erase a bit here so that I can highlight more. Okay, let's look at the next item. So here it says to you that rates and taxes amounts to 14,000 Rand per month, and it must be apportioned in relation to the floor space. The factory takes up 75% of the total floor space of the entire premises. So and remember I said to you earlier, you have the factory, and you have the office space. So only the cost specific to the factory will be included in your manufacturing overheads. Your office costs would fall under your administrative costs. So here they said to you that the total is 14,000 a month, but it must be apportioned according to the floor space. And in terms of the floor space, the factory takes up 75% of that total. So here you'd first have to work out the 75% specific to the factory, and then the remaining 25% automatically would be for the office. So please make note of that. If 75% is for the factory, then the remaining 25% is for the office. Just erasing this. Okay, so here 14,400, you are simply multiplying it by 15%, and that would be your manufacturing overhead cost. So you can even show the working out here if you'd like. 14,000 times 75%. It's the remaining, it's the 75% that is recorded, and that is 10,500. And then the remaining 25%, that is for the administrative costs. This is going to be 10,000, sorry, not 10,000, 14,000 times the remaining 25% or 0.25. So this then is the amount of 3,500. So that would be your rates and taxes, 3,500 for product X, 10,500 for product Y. You're still with me? Any questions so far? Okay, cool. So the next one is advertising and distribution costs, and this was 1,500 Rand a week. So again here, this is on a weekly basis. We do need to multiply that by 4 to give you the figure on a monthly basis. The category it falls into is literally in the wording itself. It says advertising and distribution. So 1,500 times 4 would give you 6,000, and that would be a marketing, selling, and distribution cost. Then you have the CEO's travel. Oh, sorry, I'm going back here. So we have the indirect material and it's used in production, it's 23 Rand per ton of the product manufactured. And here, 3 Rand per ton of the product manufactured. And here, there's two things that we would need to do. The first thing we need to do is look at what the category is. Indirect material, we know will fall into the category of manufacturing overheads. Then we need to calculate it based on the fact that they said to us it was 23 tons, 23 Rand per ton produced. So firstly, it's 23 Rand per ton. The number of tons that are produced, we wrote here on the previous page, was 320 tons, but this was per week. And according to our calculations, we're doing it on a monthly basis. So 320 times 4 then is what will tell us the number of units to be produced on a monthly basis. So here it is going to be the 23 times 320 times 4, because this is looking at 1 week only, the 320. We want 4 weeks because we're looking at cost on a monthly basis, and the value is 23 Rand. So 23 times 320 times 4, that would tell us that your indirect materials is 29,440. So 29,440. So this is your cost of your indirect materials. The next one we're looking at is your wages of your factory cleaning staff. It's 3,050 Rand per week. So again, it's per week, which means it needs to be converted to a monthly basis. So that will be times 4. So 3050 times 4. And the wages of the factory cleaning staff would be manufacturing overheads, and within that it would be indirect material. So under indirect material, your fees paid to these, your wages of your factory cleaning staff is 3050 times 4. So you'll write that here as well. That is a manufacturing overhead cost because your wages of your indirect labor falls into this category. So it's going to be 3050 times 4, and that would be 12,200. Then you have fees paid to the security company for the security guard that is positioned at the front entrance to the factory. And his wage is 800 Rand for the month. So if it's in the factory that this person is employed, then it would be factory overheads or manufacturing overheads, because this is a salary and wage, but it's for your factory staff. It's a security guard in the factory, so it would be an overhead cost, and here it's already on a monthly basis, 800 Rand. So 800 Rand under your manufacturing overheads is no calculation that needs to be done here. Your keywords here said to you that this is the fees paid to the security company for the security guard position at the entrance of the factory. So immediately here, you know that it is for the factory, so it's going to be a manufacturing overhead, and it's already on a monthly basis, so we don't need to continue or calculate any further. Then the same thing happened with the next item. It's also fees paid to the security guard, to the security company for the guard positioned at the main entrance, but this is to the administrative building, so it's 800 Rand per month as well. Sorry, it's supposed to be highlighting. So here, this is the cost of the labor that is employed within the office. So that would have been a general administrative cost. Then you have the next one, which is monthly insurance. It's 3,400, 2,400 of which relates to the factory. So here, you have monthly insurance that is split into two. 2,400 is for the factory, That means that the remainder between the 3,400 and the 2,400, which is 1,000, this will automatically be for the office. So the 2,400 itself, you're going to state, is going to be insurance for the factory that falls under the category of your manufacturing overheads. So here you'll have 2,400. And then in the so the remainder 1,000 that I had said to you here at the bottom, this they said to you was for the this was for the um, office because 2,400 was for the factory. So the remaining 1,000 would be a general administrative cost. Then the next one said that import tariffs and custom duties are paid on the polyethylene imported from abroad. 1,500 rand per tons received. Per 100 tons imported. And here, the first thing we need to do is identify that the import tariffs and custom duties here are paid on the polyethylene that is imported. The polyethylene is the direct material, and for this reason, its cost is going to fall under the direct material cost. Because of the fact that it is the raw material that you are importing, that would mean that it's the direct material, and because of that, because it's a cost associated with the direct material, it needs to go into the direct material category. So this is 1,500 rand per 100 tons that are imported. You need to look at how does that cost change when we apply it to the 320 units that are produced. So all you're going to do here is you're going to say that it is 1,500 per 100 tons. So if you divide 1,500 per 100 tons, this tells you the the cost of your tons. So I'm going to write here on the top that this is cost per ton. So this is the cost of 1 ton, but we are producing 320 tons. So you multiply that by 320, but this is on a weekly basis. And because these costs are calculated on a monthly basis, it will be times 4 further to that. So it's 1,500 divided by divided by 100 to tell you the cost per ton. It's basically saying that 1 ton costs 15 rand, but we said here 320 for the week, and for the month it's further multiplied by 4, and that is 19,200, and we said that this would go into the category of your direct materials only because it's a cost of the direct material. If they say to you that it's just an import tariff or custom duty in general, then you're not including it here. This was only because it was specific to the material. And also, when you are putting it into the respective category, your imports and tariffs generally go into the marketing, selling, and distribution category. So the only reason it's going into this direct material category here is because we are looking at the fact that it was the direct material on which this import tariff was incurred. Then the next one was the telephone, stationery, and general office expenses of 2,700 per month. So your general office expenses falls into the category of administrative. So that's already on a monthly basis. You don't need to calculate there. And the last one, which is railage and carriage on sales now. So it's not your railage and carriage and so on the, so here it was on the raw material, the core raw material. Here they said railage and carriage on sales is 2,200 per consignment of 40 tons sold. So it's the same idea like I had done just now with the import tariffs. You're going to say that the cost per consignment is 2,200 divided by 400. This then is multiplied by 320 products that are received, but this is for a weekly basis, so you're going to multiply further to that by 4, and this is going to tell you that the railage and carriage costs 7,040 rand. Here again, as you can see, railage and carriage is based on your marketing, selling, and distribution. So this would be 7,000, sorry, it's not writing. This would be 7,040, and you are now done with your table. So all you're going to do now is total each one of these columns. So for the month of, for the marketing, selling, and distribution costs, it's the 1,300. Oh gosh, I just need to write that down again. No, I wrote that down in the incorrect. So it was 15,600 per annum. That was your delivery. Sorry, I mistakenly rubbed that or scratched over it and then I erased it. Okay, so here you're going to, let me highlight, you're going to add the 1,300 for your marketing, selling, and distribution, plus the 6,600, plus that 7,040 that we just calculated, and that's going to give you 14,340. So 14,340 for your marketing, selling, and distribution. Then for your next one, so I'm just going to use a different color for this. Your admin cost, it was the 400 plus the 5,500 plus the 3,500 plus the 800 plus the 1,000 and the 2,700. So that's a total of 17,500 as your admin cost. Then the next one, 500 as your admin cost. Then the next one is your direct materials. It was just 100,000 there, and then 19,200 here for your carriage and railage of the direct material. That's 119,200. Your next one is just your direct material of 144,000. So that's only one figure, 144,000. And the last one then is the 13,000 for overheads plus the 82,300 plus the 10,500 plus the 29,400, the 12,200, 800, and the 2,400, and that amounts to 150,640. Okay, so that is it for this example and how to carry out this type of calculation. You will see that in your assignment, in your second assignment, there's a question that is very, very similar to this. So please make sure that you do work with this very closely when you are answering the question in your assignment 2. I'm told that there is also still an error with the second assignment that's been uploaded. I don't know what the protocol is at the moment, whether they're going to remove that and put up a new one, or whether they will just allow for us to cover enough content for that before they give you a due date. So please just wait for a new notification from the campus about assignment 2. You do have a little bit of time with that. So just wait for the notification. It hopefully should be by the end of this week or by next week sometime that they'll send out some sort of communication letting you know what to do about the second assignment. But if you look at the assignment, there is, as it stands, whatever is uploaded on your portal under student materials, you'll be able to see that there is a question that looks almost identical to this. So you can work with this one very closely. Okay, so there's a new due date. So I think, yes, they did push back the due date then, and they are allowing for us to cover the content. So I think whatever assignment is up should stand then. But again, just give it a little while before you, I would say don't start working on it yet. Maybe give it until next week before you start working on it. If you'd like, you can start working with it maybe just in rough so that you don't have an issue if they do happen to change it for some reason. But for now, just work with it in pencil, just do the rough work, use this example for that specific question and whatever else. Just work with it roughly until you get proper communication that this is what they're doing with the assignment. They are leaving it as it is, and you just have that new date, or maybe they are removing a question and they'll upload a new assignment altogether, that type of thing. Once we also do have information, I will also post up an announcement and let you know. Are there any questions from you in terms of this example that we had gone through?
Hi, ma'am. I wanted to ask a question about where you got the 320 value from. I was just curious about that.
Sorry, tell me which 120 value you're looking at.
Oh, it's when you were busy with the import tariffs for the imported product abroad for 1500 per 100 tons imported, and I saw when you said what do you call it? 1500 over 100, and then that equals 15. And you're doing other calculations, and I understand where you get the times four because it's 4 weeks per month, and you got the value of 19,200. But I saw a 320 times with that calculation. I was wondering where you got the 320 from.
Oh, the 320. Sorry, I thought I heard you saying
Yes.
120. Okay,
Oh.
so okay, so the 320 came from here. So they had said to you on the previous page with the information that the company at 100% capacity produces 400 tons for the week. And I did ask you to please ensure that you change that word. It's in your textbook, this example, question 4.2. So you would change the word month here to week. So at 100% capacity, they're producing 400 tons. So to work out, they said that currently the company is operating at 80% capacity. So to work
Oh,
out,
okay.
yes, so you'll take the 400 and you'll multiply it by 80%, but they also did that here for you. And they told you that it's 320 tons per week that's produced.
Okay, okay. That clears there. Thank you.
Not a problem. Any
Oh,
other
and about,
questions?
oh yeah, and with assignment one, are you done marking everyone else's paper already?
No, I actually only started yesterday, so it's gonna take me a little while. Please bear with me because I'm literally drowned in marking, and I also have stats that's coming in today. So I am working through it at the moment, but as I think the marks are being uploaded as I'm marking them. So as I'm marking a
Mm,
paper and submitting it, I think the marks are appearing. That's how some people have marks and some don't. But I am working on it. So you will find that as the time goes by, the marks will start to upload and become available.
okay, no problem. Thank you.
Okay, so if there's no other questions, we will end off for today. You can let me know if you have any other queries. You can email me. I'm happy to assist you via email as well. Please try this out. As I said, attempt the question that is on your assignment as it currently stands so that you do get a feel for how to go about this type of question. And then if it is the actual assignment, then you already have a head start with it. So please do try this out and I will chat to you again soon. Thank you, everyone. Enjoy the rest of your evening.